Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Dietrich, and I'm joined by my co-host, Sonu Varghese. Each week, we dive into the important market-moving events and cut through the noise to help you, as an investor, identify what really matters. Let's get this show started. Everybody, welcome to the 10th episode of Carson's Facts versus Feelings with Ryan and Sonu. Sonu, we hit double digits. Did you ever think we'd do that? Hopefully you did.
Yes, absolutely, of course. Yeah. No, that's huge. It's amazing. It's really exciting.
No, it is. It is. And, you know, something that just literally happened to me, and a little personal news for everybody here. So I just turned 44 a couple weeks ago. I took my daughter to school. I sneezed in the car. I literally, Sonu, hurt my neck sneezing. Like when someone says, how old are you? I think I'm the age when you sneeze. I've got like a pinched nerve in my neck from sneezing. And it was an average sneeze, in case you're wondering. But anyway, that's how old I'm getting.
Welcome to the club.
Yeah.
I'm 44 too. I turned 44, in May. And I feel like I get up with a backache every now and then, more often than I used to.
But you're a lot older than I am, so that's probably why. Yeah. Anyway, it's easy. So let's get into it, guys. Again, this is the 10th episode. We've had a lot of positive feedback. Thank you. We're going to keep doing it as long as you keep listening. We're going to call this one Talking Turkey. 3 things we are thankful for. Obviously, the holiday is coming up very, very soon. The 3 things: stocks keep going up. Literally, as we're recording this, stocks are up again. So that's one thing to be thankful for. Going to talk crypto a little bit. Crypto obviously imploded, but stocks almost laughed at that implosion and continue to go higher. We're thankful for that. And then finally, we're going to dive into inflation, right? CPI, PPI, what the Fed is up to. We are thankful it looks like inflation has likely just peaked. So, Sonu, we're going to start it off again. Thankful for stocks. I mean, my goodness gracious, do you think October was the low?
I think, look, you've been writing about this for a while, and, October being the bear killer, right? Yeah. And which is not to say that October was the low. Who knows, right? We don't have a crystal ball here. I wish I did, but
I broke mine when I sneezed the other day. I dropped it. So, yeah.
There you go. Yeah. Hey, but with age comes wisdom, right? So there you go. But there's some truth to that. You look to history, and this is a positive period. We talked about the next 6 months, right? It's a positive period for stocks historically. And, so just based on that, you think the odds would be good. And we've seen that so far over the last few weeks. Stocks have rallied.
Oh, my. Have we ever? We had that 5% up day last Thursday on the better than expected CPI. You'd think, wow, is that just a bear market rally? I can't tell you how many people have called this a bear market rally. Like, it's so obvious. Like, everyone knows it's just a bear market rally. Hey, maybe.
Ryan, could you explain what a bear market rally, what do folks mean by that?
Yeah. So I guess a good I like to use examples. Over the summer, right? We had a 17% rally off those June lows. And then what happened, guys? We rolled back over and made new lows in October. So it's like a vicious bounce that takes place in the midst of a bear market. Again, this summer was a pretty good example of a bear market rally. So the question is, okay, is this just a bear market rally? Or maybe the start of a potential new bull market? We'd be in the case like we've laid out. We do think, October was a low, right? 6 of the last 17 bear markets bottomed in October. We had extremely negative sentiment. We actually saw some positive technicals. The thing I talked about on this very podcast, 200 stocks in the S&P made new lows on June 16th. About 100 stocks are making new lows around October 12th. We made those lows. Less stocks were going down. That tends to be what you see at a major market low. Now, a couple other things, Sonu, I'll turn it to you. We are in November. November is the best month since 1950. The best month the last 10 years, and the second best month in a midterm year, followed only by October, which is the best month. We just had a 14% rally in October for the Dow, which historically, as we talked last week about, when you see big moves like that, that's not a bear market rally. Normally, that's the kickoff to continued strength. So, Sonu, what matters, though, is earnings, right? I right to my right, I got TV on. I see a lot of green on there. I saw Walmart. Not a recommendation of Walmart, but tell me what Walmart just said that's a lot different than in July.
Yeah, look, in July, I don't know if folks remember. You and I probably definitely do remember.
I was going to say I have no idea. July, I can't even remember what in the world. I think I started this job in July, so that was a whirlwind.
Yes,
yeah. Although I could sneeze. I could sneeze without hurting myself back in July. That's all I remember about July.
But look, Walmart and Target came out and said, look, we have too much inventories. We have to discount. Things are bad. And everyone's like, goodness, this is clear sign of a recession. Consumers are pulling back. Well, today what happens, right? They come report earnings. I'm just looking at my screen here. Revenues 3.5% better than expected. Not just 3.5%, it's 3.5% better than expected. Earnings per share, which is how much income they're basically making, that beat by more than 13.5%, right? So they highlighted strong grocery store sales, robust seasonal event sales. I'm just reading this out. Advertising tailwind for e-commerce. So all of this stuff, right? And it's ironic. We were talking before we started recording about how, when things go badly for a company, management is quick to blame everybody else, including, the macro environment is bad, right? Recession, etc., all of that. But when things go well, management is like, that's us. We're the ones who are making things go well. So it's just how these things play out.
No, it is. Time and time again, you see that. But again, we are nearly seeing a 180. And this is just one company. I want to be very clear. We're not recommending Walmart stock at all, but we are just saying what a difference they're saying on all those things. Sonu, you just listed. Doesn't really sound like a recession to me. Now, let's talk a little bit. We'll wrap this up. So we do think stocks likely made a low. The seasonals are strong, right? These next 6 months have never been lower in a midterm year. You go 1 year off the midterm election, stocks have never been lower. These seasonals, which were a headwind earlier this year, are definitely, in our opinion, likely a tailwind. But let's wrap up earnings season, because once you start seeing Walmart and some of these retailers, it means you're at the end of earnings season. I'll be honest, when I look at the headline number, what earnings are up, 2 or 3%, that doesn't sound that great, but I guess, hey, stocks like it.
Yeah, and you're comparing it to last year, right? When you say earnings are up to 3%, that's compared to last year. And last year, earnings are up a lot. And so we have some, strong comparisons to, that's relatively, that these things are calculated relative to it, right? So that's why, yes, 2 to 3% is, dare I say, weaker than we've had over the last few years. But last year was really strong. And that's why I think once we get into next year, suddenly, we get a bit of a tailwind from the fact that, earnings are slightly weaker than expected this year. I know people are talking about, earnings expectations being, brought down as the months go by. But, that's always the case, right? This thing is a game, right? I mean, earnings expectations go down, company comes, reports earnings, and boom, they report better than expected earnings. But going back to, like Walmart, Walmart is a part of the Dow, right? And other stocks that are a big part of the Dow are industrials at strong earnings, whether you talk about airlines, railroads, construction firms, things like that. John Deere, what else? I'm thinking about, Lockheed was another one, so the aerospace and defense were the only ones that were slightly weaker, but that was because of Boeing, right?
Yeah.
But overall, industrials are strong. And you see that strength in the Dow relative to the S&P as well, right? The Dow has more industrial firms. And the Dow is just a few, 5, 7, 8% off its highs?
Yeah, I was going to say let's close our eyes and take a guess what it is, but I believe it's about 7% away for the Dow from an all-time high. And that's not even looking at futures up this morning on Tuesday, the time we're recording this. We'll see where we close. So, I mean, just imagine if we make a new high in the Dow by end of the year. I mean, I'm not saying it's going to happen. I'm just saying, there's a possibility. How much would that blow up people's heads? Because there's been a lot of bearishness. And I'll tell you, on this rally, I can do a lot with social media, pointing out some of the positives, just get skewered by people for being bullish. And I've done this long enough to feel fairly comfortable when everyone thinks you're crazy, but you think you have a good thesis for what you're doing, you might be onto something. Sonu, one final comment on stocks, and we'll probably talk more about stocks when we get to inflation, honestly, because the two are linked here. We had a 5% rally, actually 5.5% rally on Thursday on the better than expected CPI, one of the largest gains we've ever seen. I went back to 1950. 22 other times you saw a single day rally of at least 5%. The future returns a year later, higher 20 out of 22 times, which I think is like 91% of the time higher. A year later, up 28% on average. All right. So, Sonu, you took a look at this. A lot of these did happen in clusters, but the only two times stocks weren't higher were 2001 and 2008. Some pretty bad times. Most of the other times, we saw some really good gains after a huge day. What did you think when you looked at that data?
That was fascinating because, as you said, look, these things sort of cluster, right? What do you mean by that? When you see a 5% up day, usually what's happened, it's responding to a -5 or -6% day before that, right? Or a few days before. So, and then it's a rebound, right? You saw this across, 97, 98, 2001, 2002, 2008. And those are deep recessions as well, which, dare I say, we're not in the middle of a deep recession right now.
Walmart said we're not.
In the middle of a recession.
Yeah.
Right? Yeah, exactly. But, I think the first line of the table you saw, and this is on Ryan's Twitter feed, if anyone wants to go look at it, and it's on one of our recent blog posts as well, right? One from last Friday or so. So that the first line that you put in there was from 1970 or so, right? And it was like I believe May 27th, if memory serves me right.
Yeah,
and that was kind of random, right? It was out of the blue, and it was based on probably fundamental news driving stocks higher, and that's always a good thing. And in this case, as you mentioned, it was a positive inflation surprise. I mean, inflation was softer than expected, and we'll talk about that. Yeah. And that's what drove the market higher, and that's not a bad thing.
No,
right? It's not responding to a -6% day, the day before that.
Right. The old saying, news trumps charts. Well, we are getting some positive news on inflation. But let's move forward, Sonu. We're going to talk about the crypto market and the implosion, a little bit of our opinions there, but we want to, maybe get to know each other for a second. How excited are you for Thanksgiving, and what's your favorite part of Thanksgiving? Oh, well, what's your favorite food is what I meant to say. I assume your favorite part's the food. What's your favorite food when it comes to Thanksgiving? Yeah.
I think so. I didn't grow up with Thanksgiving, so it was a new thing once I came to the U.S. This is about 22 years ago.
Okay.
And I have to say it's pumpkin pie. Goodness, I mean, yeah. I have a big sweet tooth. My whole family does. So I think pumpkin pie more than anything else. So I like pecan pies too, but pumpkin definitely.
That sounds good. I got to say, I like the turkey, but I like it the next day, right? The next day, maybe watch some football, kind of make a turkey sandwich that next day, put some Hellman's mayonnaise on there and some lettuce, tomato, toast the bun. Oh my goodness, I'm making myself hungry just thinking about it. So yeah. So anyway, so that's exciting. And again, we called this one Talking Turkey. 3 things we're thankful for. First thing we're thankful for is stocks are going up. That's great. The next thing we're thankful for, the crypto market imploded last week, but stocks just continue to soar. Sonu, you did some amazing work in the notes that you now put together for our partners that we're sharing on our brand new content hub here at the Carson Investment Research team. I think you wrote 2 days ago on this. We don't want to get too in the weeds in this, but what in the world just happened with the crypto market? And again, no recommendations at all, but what just happened?
Goodness, there's so much you can. It's just a mess, right? It's just a mess.
That's why I'm having you explain it, because I'm still stumped. Every hour I read, like, oh my God, he did this, he did that. It is crazy the stuff that continues to come out.
I know.
Yeah.
Yeah. So I'll try and summarize this, right? So FTX, that you've probably seen that. All of you listening to this podcast, probably seen that in the headlines somewhere or the other over the last few years, right? The last few days, really. Maybe even years. Yeah. Anyway, FTX was a cryptocurrency exchange. It was set up by the founder, Sam Bankman-Fried. And it was essentially set up, behind the scenes so that his hedge fund, which is Alameda Research, so that they could trade on margin and avoid paying exchange fees. Why trade on margin means you get a loan, right? And you get a little better terms on the loan to make bigger trades, right? So FTX ended up becoming like the number 2 or number 3 exchange behind the number 1 exchange is Binance. Set that aside for now. We'll talk about that. There's some interesting things going on there with Binance and its founder as well, and how this whole thing started. But anyway, by itself, look, an exchange can be boring, right? You make, say if I want to buy Bitcoin, I put, say, $100 in to the exchange, and you want to sell Bitcoin, and the exchange facilitates that, right? It transfers my $100 to you, and it gives me Bitcoin, right? And that's parked in the exchange. So the exchange can make money through commissions and market making on the spreads, right? So instead of giving you $100, they may give you $99.50, and they'll pocket the 50 cents, right? So that's basically what's going on. But anyway, FTX has this huge base of customer assets, right? And they thought, okay, let's put this to work, right? And that's where Alameda Research came in. Alameda needed capital to make leveraged bets, right? Or cover, dare I say, leverage bets that went wrong. Right. Why does leverage matter? I mean, we've seen this time and time again, not just over the last 2 decades or probably the last few centuries, right? Say you have an investment that will give you 5%, right? So over, say if you have $100 investment, it will give you $5. That's not very exciting. So what do? You say, okay, I need to make a 50% return. So you go and borrow $900, right? So suddenly, instead of $100, you're using $1,000, right? And 5% of the 1,000 is $50. So you've suddenly made a, massive return, $50 on your initial $100 of capital, right? That's leverage. The problem is, if that $1,000 goes down by 10%, your capital of $100 is wiped out, right? So that's basically probably what happened to Alameda. So to cover their losses, all these customer funds were transferred from FTX to Alameda Research, right? And that's the hedge fund we are talking about. Now, there's collateral to replace the customer funds, right? But what was the collateral? It was the exchange's own crypto token, right? This token, this coin called FTT. So when a customer, say, looked at their balance on FTX, they could see the value of the assets they deposited, but underneath what was actually there, it was FTX's own token. The idea was that FTX could sell the token if a customer wanted to withdraw the assets from the exchange. Look, and they were assuming that, look, the token would hold its value. And as crypto goes, the more tokens that are created and traded, the more the price goes up. And that's exactly what Alameda Research did. They were actively buying and selling these tokens on the exchange. The price of the tokens rose. And the balance sheet of FTX and Alameda ballooned, right? Massive, $16 billion.
Right.
And the founders made billions of dollars in unrealized profits. But of course, below the surface is a massive mismatch, right? The asset balances they're reporting to customers versus the assets these exchanges actually held. And of course, the worst happened. The price of these tokens crashed, right? And suddenly they had no, assets to match the liabilities.
All right.
That's basically where we are. And
wow.
Everyone's insolvent.
So let me jump in for a minute. The great summary of what just happened there. I mean, so the question I guess that we've got, and a lot of people do, is this kind of the tip of the iceberg, right? Is this like the Lehman Brothers moment? Larry Summers had a great analogy last week. He said, this feels more like an Enron. All right. This is company specific. Some of the, and again, we don't know any more than what's in the news, but some of the things that SBF was doing, moving funds around without people knowing and taking customer funds, putting it here, putting it there. He's in trouble, right? The company's clearly in trouble. He's in trouble. A lot of people in Washington now are mad. I mean, let's not forget, again, don't shoot the messenger here. He was one of the top donors to President Biden. He's very connected in Washington. So the tentacles of this whole thing it's going to be fascinating where it goes. Oh, and you made a joke that you thought Michael Lewis should write a book about it. I sent you a link. It seems like Michael Lewis has been following him around for 6 months. Like, are you kidding me? How, I hate to say perfect because it's devastating what's happened, but how interesting is that Michael Lewis is probably going to write a book and have a movie on the fallout from all of this. But Sonu, the question I've got for you then, it sure doesn't feel like the first domino to fall to take down the entire financial system. That was some of the worry. On Tuesday, during the midterm election day, stocks sold off, and we said, it's because of the election.
And on Wednesday as well, right?
Yes, on Wednesday. But it was likely the worry over what's going on in crypto land. But then stocks have continued to soar, honestly, which I think is a really good sign for stocks. But what's your take? Is this so it doesn't look like it's affecting stocks. Let's go this route. Could this affect all of crypto and other exchanges? It seems like they're all linked one way or another. They all own each other's coins. They all got some deals together. Again, we're not making a call with crypto here, but how bad could this be for the industry?
I mean, I don't want to make any predictions because even 2 weeks ago we had no idea, right?
Right, true. I never heard of the guy. Yeah, I mean, sorry, I never heard of him. Yeah,
we had no idea. So who knows, right? With respect to crypto itself, and I don't want to make any predictions as such, which may or may not sound like a recommendation. But look, it's at the end of the day, these things work through trust, right? Finance works through trust, and the whole idea behind crypto is that you don't have to worry about trust, right? Because the technology, this blockchain technology, will take care of that for you, right? But hey, turns out you need trust at the end of the day, and these people were not trustworthy.
No, well said. And I've seen the example of this, and I'm going to dust it off again, but FTX bought the rights to the Miami Heat Stadium, and sure enough, now their company doesn't exist anymore. And you've seen this before when companies buy, not always, trust me, guys, I know that, but a lot of times when companies start buying the naming rights of stadiums, those companies, kind of like when the Dow kicked out ExxonMobil in, I think it was September or October of 2020, and then the stock's up 200%, and they added Salesforce down like 40%. Again, not a recommendation on either. It's interesting when those things happen, that tends to be a change in overall sentiment, and it sure sure played out again. But the bottom line, we're watching crypto closely. Devastating what's happened to a lot of people in that industry and with a lot of investments. But from a stock market and honestly economy point of view here in the U.S., it doesn't feel like it's spilling over, and we're thankful for that. Sonu, the third thing we're thankful for.
I think that's a big thing to be thankful for, right? I think 2 weeks ago, if you said that, there's this massive blow up in the number 2 or number 3 exchange in crypto, I'd be like, wow, I wouldn't be quite sure how that would impact the stock market, and even the economy to an extent. But so far, we haven't seen that, and that's great.
Exactly. And let's be very honest here. I mean, NASDAQ and semiconductors and some of those things are a little more intertwined with what's going on in crypto, at least historically. They had a huge week last week again, and continue to soar, at least Tuesday morning, the time we're recording this. All right, so the final thing we're thankful for, I think that's honestly might be number one because it might matter more than anything. It sure looks like inflation has peaked. So on Thursday, we had that CPI data come in. It was really positive across the board, had a 5% rally in the S&P, more in small caps, more in technology. PPI just came out this morning. You and I haven't had a ton of a chance to look into it, but futures are soaring, so I'm going to assume the PPI number was good. Let's go to CPI for a minute. What, people probably have time to look at this. In a minute or two, what really struck you as the big positives for sparking that huge equity rally we saw on Thursday and honestly followed through on Friday?
It was really about core inflation. And by core inflation, I mean inflation excluding food and energy, which are typically volatile. That's why we exclude them. Of course, the irony being over the last year, most things have been volatile with respect to prices, right? But look, this report is good on so many levels, right? The big thing was that goods prices fell. We've been waiting for this for a while. We've been talking about, supply constraints are easing. Retailers have a lot of inventories, which they have to discount, but we didn't see official prices fall yet. But this month, or I should say last month, it happened, right? We saw prices for used cars, household stuff, like furnishing, appliances, things like that, apparel prices, all of that fell. And like I said, we've been waiting for this for a while because the private data has been showing that prices have been falling, right? And normally you could argue that prices falling for goods in the CPI, numbers could be random. 1 month it goes down, next month it goes up. But look, right now the official data is just corroborating what we are already seeing in the private data. And so I think it's like verification almost, right? It was like, here's the trend. And this makes sense, right? It's not some random thing that's happening month after month after month. And the important thing is it buys time, right? We've talked about rental prices being high in the official inflation data, even though in private data, it's been coming down, right? But this deflation in goods offsets that strength in rental inflation. So what does it do? It buys time, right? It buys time until that official rental inflation data can start coming down, right? And we know it will, right? I mean, at some point, the official data will match what we are seeing in the actual real economy. It's just going to take some time, probably maybe about 6 to 8 months. But if goods prices continue to fall, especially at the rate, what we saw last month, that's going to offset that strength in, services, especially rental inflation. And so that buys time for the Fed, right? We talked about elections happened last week. You talked about crypto, but the inflation report is a reminder that, at the end of the day, what matters for the stock market is what's going to happen in monetary policy. Right? What happens at the
Absolutely. So just a couple notes that I wrote to myself here. Services ex shelter was down 0.1% month over month, the lowest since May of 2020. Health insurance dropped 4%. We talked about that before. We'll get too in the weeds here, but there have been some games being played with health insurance because of the way that it happens once a year when usually companies reset. Bottom line, guys, what the largest monthly drop ever in health insurance, down 4%, and it'll be more of a tailwind going out 4 months. And then used cars make up about 4 to 5% of CPI. Used cars had a huge drop, down, where is it, 2.4%, which is exactly what we've talked about the last couple of months, because the Manheim used car index has been telling us lower car prices were coming, at least used car prices were coming. The bottom line, after the pandemic, all the rental car companies had to go back and buy the cars they sold. Well, now their fleets are finally getting back to normal. So we're seeing some positives on that front. Food is still going up, right? The cost for food, but it's going up less than it has all year when you look at the month over month changes. So, I don't know, all in all, Sonu, maybe let's put it like this. And 82, right? Massive inflation. We know that. When inflation peaked and started to roll over, you know what happened? Stocks went up a lot. Here's what I mean by that. 21-month bear market. S&P lost 27%. When it became clear in August, September or so, when inflation rolled over, stocks in 3.5 months moved up to a new all-time high. We're not saying it's going to happen like that this time, but what we are saying is when we've seen inflation start to roll over, and this morning's PPI number, we haven't had a chance to really dig in, but it looks positive again, confirming inflation on the producer, consumer level, lots of places, it likely is coming back down. So, Sonu, now to you. The question is, what does it mean for the Fed? Is 75 basis points off the table in December, you think?
I think so. I was kind of there even before this report came out, mostly because Powell said that, now it's a couple of weeks since a meeting. It seems like time passes so fast, right? But yeah, no, he said, look, first of all, they didn't really need a soft inflation report to, bring down the pace, right? How fast they're going to raise rates. They didn't need a soft inflation report to go from 75 to 50. So I think the odds for a 50 basis point 0.5% increase in December was high anyway. It was just about a coin flip, 50 to 60%, right? But after this report came out, that meant that probability of a 50 basis point rate hike went to 85%, right? Yeah. Which means that's what market investors are expecting. But what's going to matter is okay, that's fine. How fast they're going. Okay, we've seen peak pace, right? 75 is done with. They're going to 50, right? The question is how high, right? And for how long instead of how fast. So the market is pricing in a rate of the highest rate of about 5%, the so-called terminal rate, as they call it. And it's still kind of there, right? Maybe slightly lower, maybe 4.9% or something like that. But further out, expectations for the Fed funds rate, which is what the Fed targets, that dropped after this inflation report came out. I mean, if you look 1 to 3 years from now, right? Where will rates be? Those expectations fell, and which kind of makes sense because look, if inflation falls, then you don't need interest rates to be as high. And that's why, all in all, that was positive, right? If rates don't need to be as high, the Fed doesn't, it means the Fed's not hiking rates as fast as everyone expected, maybe a month or so ago. So well, I think, a huge thing to be thankful for, which is why this inflation report is so important on so many levels.
Absolutely. And the thing is, we've got some more inflation reports coming before the next Fed meeting in December. So, hey, maybe we follow some really smart third-party research, and some of them are saying, listen, 25 is on the table more than you think. So again, we'll see. But again, it's just definitely reason to be thankful that we've seen stocks all of a sudden form what we think is a major low. We've seen crypto implode. Not thankful for that, but we're thankful that stocks and the economy just seem to be going right past the crypto implosion, crypto winter, I guess is what they call it, right? And then lastly, we are very thankful that it looks like inflation has started to peak. Now, Sonu, you might have saw if you're watching me, I was just doing some stuff on my phone. I have maybe the most important thing I possibly am doing all week coming up here in about 20 minutes. And if those of you who know, I
want to know what that is.
Yeah. Well, it wasn't this podcast, I'll tell you that. It was only because my daughter would kill me if I mess this up. The Taylor Swift, right? We were verified. My daughter and wife were verified to buy Taylor Swift. Like back in the day, you just called Ticketmaster and buy tickets. No, you got to get verified to get the right to buy tickets before everybody else. So in about 15 minutes or so. Do you have to show
your birth certificate, a passport or something? What do they do?
I had to give blood. I actually I'm teasing. I don't know. No, I mean, I had to set up an account on Ticketmaster. But anyway, so my daughter's like texting me, making sure she's got this list of things I got to do. So we got to wrap up this podcast because myself, the Dietrich family, and everybody else in America is trying to help the economy by buying Taylor Swift tickets, which she started off with I don't know what it was, 24 concerts. Now it's 49. So I've got my helmet here. See, I got my helmet. I'm gonna put this baseball helmet on because I'm going to war in these I don't know, chat rooms or whatever they're called, queues, whatever they're called, to try to get my daughter these silly Taylor Swift tickets. But with that, everybody, thank you for being here. Sonu, awesome discussion as always. Cross your fingers for me next 30 minutes or so how my life goes. Because my daughter she's going to come home. She's going to she's not going to be happy if I don't get these tickets. I told her, listen, there are other ways to buy tickets. There are, places you can go if you don't get them, but I'm hoping I get these tickets. Anybody else out there trying to buy these silly tickets, good luck to you. So everybody, we'll be back next week. We got a special podcast next week. Jamie Hopkins from our team has a brand new book out. He's going to come on the podcast and talk about that, about how how he's helping people find their freedom through investments and financial planning. Should be a really, really fun discussion. But with that,
it's going to be awesome.
That's all right. With that, we'll see everybody next week. Have a good one. Take care. Bye-bye. Information provided on Facts versus Feelings with Sonu Varghese and Ryan Dietrich are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM, LLC, or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM, LLC.